Hello guys, welcome again. It's business time. You're watching me right now. Yes, you're watching me right now and you work a 9 to 5 job. This video is for you. So do well to stick through till the end of the video. And working a 9 to 5 job, there's nothing wrong about working a 9 to 5 job. But most people that work a 9 to 5 job, they want to make an extra income aside their job. Yes, some people are even trying out trading and they are also doing their 9 to 5 job, but they don't know how to go about it. If you're doing a 9 to 5 job, the only style of trading that is going to work for you is swing trading. Yes, because swing trading, you can place your trade and you forget about it in your job. You are just doing your job, and after the close of the day in your workplace, you can come check your trade and see what your trade has done. You have made a lot of money just placing a trade and being at your workplace. You don't necessarily need to stare at the chart all day to make money. So the style of trading you're going to do as someone who does a job is swing trading. Swing trading is what is going to work for you. So I'm going to be revealing a strategy, a daily killer strategy that works for those that do a 9 to 5 job. Yes, this strategy is going to help you. It uses the daily time frame as entry. So you don't have any problems having to wait for your entries, having to check your entries while you're at work. You just at the end of the daily candle is what you use to place your trade. So you have all the day to make a decision before you place a trade. So doing your job is beautiful. Everyone has to concentrate at their job. There are some people that love the job they do. They love the environment. They want to get that promotion. They just want to be around workers. They just love the zeal and the everything, the joy of working for someone. Some people enjoy it. Yeah, there are people that enjoy working for people. So there's nothing wrong with working for someone. So we actually need those people in the society. We need the 9 to 5. We need the doctors. We need the engineers. We need the lawyers. They are very necessary in our society today because we can't do without them. But these people, some of them also want to make money from forex trading. So how are you going to make money from forex trading when you do a 9 to 5 job? I'm going to be teaching you today in today's video, and make sure you follow every point I lay down so that you could understand how you could trade forex, make money, and still do your 9 to 5 job. So without wasting any of your time, let's dive straight to it. Watch through to the end. Do that. Make sure you watch through to the end. Let's go. This is my chart, and this strategy uses the trend. You need to know the trend. If we are on an uptrend and if you're in a downtrend, you're going to be selling, and if the market is on an uptrend, you're going to be buying. And if the market is consolidating, then you don't have anything to do. So how does an uptrend look like? You should know this by now that uptrend we have higher highs and higher lows, higher high, higher low, higher high, higher low, higher high, higher low. We want a quick breakout. We want a good breakout of this zone to consider it's an uptrend. We don't want a choppy breakout. We want a full breakout of this zone, at least up to 2 candles to the upside to consider it an uptrend. So we have a lower low, lower high, lower low, the next lower high, the next lower high, the next higher high cannot be valid if this lower low, higher low, if this lower low has not, if price has not broken this level cannot be valid if price has not broken this level. So if price break out of this level, that's when this level becomes valid. Then we can now look for a retest to this level and look for the buys. Right? So as a downtrend we have lower highs and lower low. So this is how an uptrend look like. An uptrend, you see move like this, and in the downtrend, you see the market going down. So this is what you need to know. This is kind of basically what we're going to do here. We're going to be identifying trend in the weekly time frame and using the daily time frame as our entry time frame. So it's just a break and retest strategy. Just a break and retest strategy. So let's go straight into it. And this is pounds Australian dollar. Now let's look for a trending market and see what price did. Let's take our tool from here. Let's see. You can see from this side, we are in a downtrend. The price is moving down in a downtrend. Now, where is our support level? Where is price going to retest, and we're going to be looking for the sales. Obviously, we have this zone, and we have these two levels here, right? So if price if price when price was moving up to this level, how is our trade going to look like? How is the trade going to look like? We're going to have we're going to go to the daily time frame and look for the entries. Obviously, we're going to go to the daily time frame and look for the entries on this zone. So what do I want to see? I want to see a bearish engulfing candle inside of this zone. That's all. Once I get a bearish engulfing candle in this zone, I'm going to be selling to the next low. So let's see what price did on moving up to that zone. Let's see what price did if price gave us a confirmation. This is a confirmation. This is our confirmation in this zone. I can see that price pulled up to this zone and gave us a bearish engulfing candle. We first had this indecision candle. We're not going to get in on this trade here. So this was on a Friday, this was on a Monday. So this was going to be your confirmation. See, you have enough time. You have enough time to place your trade. Placing your trade here now, your stop loss is going to be above the zone. Now, how did I get this zone? I got this zone from the week. You're going to mark the week of your support. This is the week and the body. The week and close of the body is going to be your zone. So you go to the daily time frame and look for entries. Now I have my entries. Here. Where is going to be my take TP? My take profit. My take profit is going to be a previous low, which is somewhere around here. Yeah, should be my TP. So let's see what price did if price actually came to the downside. So your stop loss should be above this zone, or just above the zone, a bit above the zone. So this is how the trade is going to look like. Let's see what happened. Oh, shh. So our price took us out. So our price would have taken you out on this trade. So this is just I'm not telling you that you're always going to win. Of course, in trading, we have win and we have losses. So the losses are also part of the game. So this is just like a losing trade, but you can see that the analysis played out after price took you out. So let's look for another example again. It works all the time. It works almost all the time. Now this is another level. This is another zone. Now on price coming to retest here and slow down, moving to the upside again, we are now seeing a what? We are seeing an uptrend. We are seeing an uptrend from this level. Why is it an uptrend? We are seeing our price has broken a new high, right? Price has broken a new high. We're not going to be waiting for retracement to this level because this breakout is not good enough. Like I say, we need a good breakout to consider the buys or to consider the sells. So we have a good breakout here. From this breakout is good from this zone. So this breakout is good from this zone. So now waiting for a retracement after this breakout, waiting for a retracement, to this zone and taking the buys is what you're just going to be doing. So going to the daily time frame, let's see what price did on retracing to that zone. Okay, we're in the zone now. We're in the zone. Let's see if we have an entry. Do we have an entry? Yes, we have an entry. We have a green candle confirmation inside of this zone. That's going to be your exact entry. You place your entry here. Your stop loss. Your stop loss should be below this zone. Like I said, how did I get the zone again? I got the zone from the week. Last week, I'm body closed. This is the week of this resistance level, and there's no body actually. So I just mark the zone like this. Good enough like this. So going to the daily time frame, with time you're going to understand how to mark your zone. You just with time, you cannot know everything in one day. So this is going to be the take profit. Take profit is going to be a previous high, which is here. I'm not going to mark here because I don't see the tendency of price moving up to this level. But I'm going to mark I'm going to like I will take I know price can pull up to this level, but I feel safe taking my take profits from here. So my zone is under here. So I'm going to take 1:2 on this trade. 1:2 is a good risk to reward for trades like this. 1:2 is a good trade. See how price has retraced to your 1:2. So what you're just going to do now is to what you're going to do now is to place your trade and see what happens. You see, we're still moving, we're still moving, we're still moving, we're still moving. I see price got to your take profit. And look at this structure carefully. You can see that before price moved to our take profit, price almost came to stop loss. After we entered there, price pulled down, almost close to stop loss, and still pulled up to the take profit. So this trade, I think this trade took around 3 weeks. So you have been in this trade for 3 weeks. So this is the kind of trade you're going to be taking as someone who works in 9 to 5, because you don't have all the time to be on the trade, on the charts trading. You don't have all the time to be trading the charts. You don't have all the time to be looking at the charts. So you just place your trade and you go do some other things and you go to your job. So this is the kind of trade. This is how it looks like. Now let's look at another trade. Let's look at AUDCHF. AUDCHF. Can you tell what the trend is saying here? Looking from this angle, I can see a break of the structure here. I can see a break of structure here. And you can see the retracement and you see the cells. Now, how would you have been able to catch this cell from here? Right? That's the question I'm going to ask. How would you have been able to catch the cells from that zone? Now, see this break of structure. We are down in the downtrend. Like I say, in this strategy, you should be able to spot the trend, either downtrend or uptrend. That's what you'll be doing. Once you're able to spot the trend, you wait for a retracement to the support levels. In a downtrend, you wait for a retracement to the support level. If you're buying, you wait for a retracement to the resistant level. If you're buying, you wait for a retracement to the resistant level. What do I mean? As you can look carefully here, you can see if this is an uptrend now. You see price broke out from, even though this is not a good breakout. Let me look for something better. Let me look for something that is better. Okay, you see price has been an uptrend here. You see when price broke out of this resistance level here, when price broke out of this resistance level in an uptrend, you see when price retraced to this level, you can see the move to the upside. So that's exactly what you're going to be looking for. You're looking for the trend. Once you're trading with the trend, price is going to go in your direction most of the time. So marking your body again, you mark your week, you mark the last body, you wait for a retracement to this zone. Now going to the daily time frame, that's going to be your entry time frame. Remember, your daily time frame is your entry time frame. So once you go to the daily time frame, what you want to see is a bullish, bearish engulfing, a bearish candle inside of this zone. So let's play our replay tool and see. Let's see if price give us an entry. We have two candle confirmation there, which are not great. This candle confirmation, you're not going to be jumping on this candle confirmation because this does not look good at all. These candles are very, very choppy on this zone. So it won't be wise for you to have placed your sales from that level. You keep waiting to see a better confirmation. You see, we have a better confirmation now. See, we have a better confirmation. This second candle would have been my confirmation. I will not enter on this candle. I will enter here because this is a better selling candle for me. So this is going to be the entry. Entries are going to be here. Then take profits. Take profits will be a previous low, which is here. Stop loss above high, obviously above the high. Then let's see what price did, if price actually sold to that side. You can see a very beautiful trade. So this is how it works. This is just exactly how it works. Now let's see again. Let's see again if we have something again. Now, since price came and sold here, we see that price have been consolidating around this zone. That's it has just been the consolidation around this zone. There's no breakout until we finally had a breakout. Yeah, this was when price finally broke out of this zone. So on price breaking out of this zone, this is going to be your resistance level. Resistance level still remains weak, and body, close of the body, which is here. So now looking at this level from this side, there was no breakout until this side. You see, this is where we had a major breakout here. So on price breaking out of here, retracing, this would have been your entries. Now, on price retracing to that level, how would you have entered your trade? How would you have entered the trade? Right? How would you have entered the trade? Waiting for adjustment, you go to your daily time frame, obviously. Go to your daily time frame. As you can see, you go to your daily time frame and wait for retracement and a bullish engulfing candle. You're selling, it's a bearish. Now you're buying, you're looking for a bullish. Now let's see what price did. Let price drop down to that zone. I would have entered on this candle confirmation. This is going to be my entry confirmation here. I'll enter here. My stop loss will be previous high. Remember, previous high. Stop loss below the zone. Below the zone. Don't forget, below the zone is going to be your stop loss. Then this is how the trade is going to look like. Then you click on buy. That's all. Click on buy. Let's see. Okay, see price is rallying to the upside. And price does in fact take out the profits. Let's see more. Let's see what price got to. So your price has hit your take profits here. Very beautiful trade. How long did this trade take? You entered on the 11th of June and you left on the um, 3rd of July, which is roughly 3 weeks. 3 weeks trade. So this is the kind of trade. This is a swing trade. Obviously, I'm not showing you day trading. This is swing trading. So this is what obviously you're going to be doing in your trading. So just adopt this style and you'll be able to work and still trade. Now let's look at USD card. I'm actually going to take a trade from tomorrow on this trade, on this pair. Why am I going to take a trade here? I can see a break of structure and price is printing to me that, okay, now I'm now in the downtrend. The same came to this level, price came to this level, dropped down, price came to that level, dropped down, moved up again, came down, moved up again, and finally broke down these support levels. So we are now in a downtrend. We are now in a downtrend. We are now in a downtrend. So how am I going to mark the zone? I'll mark the last week I can identify, which is this, and the body, which is this. Now I'm just obviously waiting for a retracement. Now on this retracement, now looking at this structure level on this particular trade, I'm going to be holding this trade till these last support levels. Why? Because I can see a double top in the weekly time frame. This is a clear double top in the weekly time frame. You can see the first leg up again to this level. So I'm expecting, since price has come up to this level and broke down and still breaking the structure level, it means that we are going to be putting up, price is going to move like this, and move up again. This is something like this is what I'm going to be seeing here. So I'm waiting for sales in that zone. Now going to the daily time frame, what the price do in that level? What the price do? Let's take our tool and play. Let's cut this and see what price did. Let's see. Let's go to the daily time frame. Let's go to the daily time frame. Let's play. Price, okay. Price is getting the zone. Price now in the zone. Is there a confirmation? Yes, we now have a bearish engulfing candle in this zone. Now, am I going to place my entries? Yes, I'm going to place my entries. Stop loss above the zone. TP down to this low. This will be giving us a 1, 1, 2. four 1 to 4 hour. So let's see how this trade are going to look like. See, this is the current position where we see price almost, if not price almost hits our stop loss. You already hit stop loss, but if price are already taking your stop loss, on getting this candle confirmation, you're still going to place this. You're going to place the same trade again. Yes, you're still going to enter on the same trade. The fact that price stop you out does not mean that the trade is no longer valid. Sometimes you can still get a second confirmation. See, a price just stopped you out. Why I'm going to enter this trade again is because I can see a double top in the daily time frame. So, and double tops and double bottom are patterns that usually move the market massively. These are patterns that usually move the market massively. So, I'm seeing price retracing here and stopping me out. I'm going to enter on this candle confirmation. So, that's just all you need to know for this style of trading. So, if you've not subscribed to this channel, do well to subscribe, like this video, and share to your friends who are interested in learning Forex and are working from home. You can just trade the break and retest strategy and make money from it. It's a very simple strategy. Very, very simple. See you on our next video. Bye for now.